Good evening, ladies and gentlemen. In our ongoing series of how to tackle, invest, and prosper in markets consolidating near record highs, we bring to you individuals and professionals who understand equities intuitively and have been dealing with them over the past 3 decades, especially at a time now when, despite all the good news that can be there in the economy, our markets refuse to move beyond a narrow trading range. Our guest today is a man of many talents, Sudip Bandyopadhyay. Over the last 3 decades, Sudip has dirtied his hands in trading in the open outcry system, has built organizations, and is a CA and ICWA by qualification. Therefore, he understands balance sheets and financial statements intuitively. He's headed the treasury operations of ITC for 16 years and then shifted to Mumbai, the financial capital, where Sudip built several organizations in the financial services space. He's a dear friend as well and understands markets in a way that very few people can make sense of. Sudip, welcome to Business Today Television. Share with us what are your thoughts and expectations from markets from these levels?
Well, I think you have to look at where India is and where the economy is going to understand the market. The way India is poised, I think there is a structural change. So while we are looking at we are very near all-time highs and knocking at the door of 20,000 levels in Nifty, give or take 200, 300 points. But the fact remains that there are a whole lot of structural things which are happening in India, which makes India attractive from an equity investor's point of view. And some of these reasons have got to do with what India has been doing, and some of it because of the geopolitical position. Now, if you look at a global investor, now from his point of view, India with 6% plus GDP growth, depending on what version you are taking, but the point remains that it's 6% plus. Now, a large economy growing at 6% plus is definitely a good place to invest. The second issue which the global investors are facing, the other economies which were rapidly growing, particularly China, has been slowing down. There has been a whole lot of impediments and setbacks as far as investment in China is concerned. And that has made the investors wary. They are looking at alternate geographical locations to invest, put their money to work. And I think the only market which can do justice to the quantum of money they are talking about, at least to an extent, is India. So India is attracting that money which is moving out of some other emerging markets and flowing into India. As far as domestic situation is concerned, some of the structural reforms carried out over the last 15, 20 years have started bearing fruit. Whether it's Jan Dhan, whether it's the GST implementation, or even things like the implementation of the Aadhaar. Now, all these have created an atmosphere where doing business in a structured way is becoming easier and facilitating. I just add one more thing, Shai, on top of this, is that the recent changes made in the Income Tax Act, which makes corporate tax very attractive vis-a-vis a lot of other geographies. Now, this was never the case in India, and it has now become an attractive from a tax point of view also for corporates. The last thing I will say is that I think the infrastructure build which is happening, the roads, the ports, even the railways, I think that's may not have happened fully yet, but over the next 5 to 7 years, we will see this infrastructure also will be a multiplier as far as economic growth is concerned. So Indian markets, yes, they deserve a better valuation. If you are talking about very short term, markets are range bound. It's a bit frustrating sometimes. But if you look at medium to long term, I have no hesitation in mentioning that I think we are on a good state, and Indian markets will give better returns than most markets in the forthcoming 5, 10 years.
Right. Sudip, let's go beyond what the macro is, which so beautifully, you've described the seductive allure of India for a global investor. Now, help us construct a portfolio from current levels. Of course, this rally has a long runway ahead, and we see a fairly higher level of Nifty over the medium term. But if you were to position a particular client, say an HNI or even a retail investor, how would you construct his portfolio given the circumstances that we have, record highs in almost every index that you and I track, and every dip in the market getting purchased? It's a difficult task these days, but that's why we have you here.
Well, I think it is difficult, but it is not impossible. And I think it should be rewarding as well. Let's take your example, an investor who has money to invest and wants to enter Indian markets now, what he should do and what he should buy. Now, first condition I would like to put before recommending is that he should be a long-term investor. He should have a time horizon of 1 year plus minimum. If he says that he'll invest and want to exit tomorrow or next month and all that, it's very difficult because there is going to be in the realm of speculation and flows of the liquidity. But if he has a 1 year plus time horizon, I will recommend the following. The first thing which I will tell him is that look at sectors where a lot of money is going to be spent and a lot of activity is happening. I think one such sector is infrastructure, cap goods. Government outlay for capital expenditure in the last budget was record breaking. And along with government, I think private sector also has started spending money. The capital goods sector has got revived, and the entire railway, roads, ports, that there is a huge amount of work happening in that. Now, which sectors benefit from that? Now, if I have to pick one company beyond sectors, that will be Larsen and Toubro. Why? Because Larsen and Toubro, if you look at, they're present in pretty much all these sectors I talked about. They are in construction, they are in infrastructure, they are in capital goods. They are also in hydrocarbon. Now, in all these sectors, there is a fantastic tailwind as far as Indian market is concerned. And all companies in these sectors, even other than Larsen and Toubro, have order books which are record. Now, the question comes of implementation, track record, the management bandwidth. I think with Larsen & Toubro, you get that. So Larsen & Toubro is one stock which, in spite of whatever movement has happened in the past, can be bought at current level for a 5-year hold or 1 year hold or 3-year hold. You decide your horizon, but it should be 1 year plus. Go and buy Larsen & Toubro. It's absolutely
right.
The second stock. Sorry, you want to go on or you ask something?
Sudip, this question will have to be taken. We are at a situation where there is renewed enthusiasm, momentum, and trust on the PSU basket. You have seen the markets in a far deeper way than I have. And oftentimes, long-term investors have been disappointed with PSU companies for whatever reasons, right or wrong. I don't want to get in there. But somehow, is it different this time? Look at the rallies in the defense space. Look at how railway stocks are running on the back of what the government has mandated in the railway budget and also the national budget. Is this different this time? Or are investors likely to be disappointed in the medium term with valuations that we are seeing, especially in the defense space and railway stocks?
I will look at it slightly differently. Yes, you're absolutely right. Investors have time and again been disappointed in PSU stocks. Even I have been disappointed multiple times in PSU stocks. And there were multiple reasons. And as you rightly said, let's not delve into that. As far as timing is concerned, I think there are certain pockets in the PSU basket where investors can definitely look into even now. You talked about defense. I would say that defense was a fantastic buy 1 year back, but kind of rally we have seen, it's amazing, it's mind-blowing. And I believe that probably the valuation has run a bit ahead of the ground realities as far as defense stocks are concerned. By no stretch of imagination, I'm saying they won't do well. They will definitely do well. They have fantastic order books. Some of them have excellent track record of execution.
Right.
So there's absolutely no problem. But just that the fact that the valuation has kind of are definitely looking a bit rich at this stage. So I will not recommend a buy on the defense stocks at this stage. But the other two areas, one is financial services and you mentioned railways. Financial services, the banking space is full of PSU banks. There has been a lot of disappointments, but the fact remains that State Bank of India continues to remain one of the best banks in the entire banking industry, and is available post the corrections recently at a valuation which definitely seems very attractive from a 1 year plus time horizon point of view. Not only SBI is doing well, it's all its subsidiaries are also performing exceedingly well. Whether it's a card, whether it's a life insurance, asset management, general insurance. So I think the combined strength of SBI is fantastic and can be bought at current levels. As far as railways are concerned, I am a believer in what is happening. I think we have never seen such developments in the railway sector ever. You have this, all the railway wagons being ordered, all the railway coaches being ordered, the railway line modifications are happening, signal modifications are happening, railway stations are being revamped. So it is a new paradigm as far as railways are concerned. And the companies which will benefit definitely, I mean, a lot of companies will benefit, but the companies which will benefit definitely, some of them have run up quite a bit. Titagarh wagons have run up quite a bit. But Texmaco is in a similar space, wagons. They were not doing things right, but at this stage, they are getting their act together. The runway looks fantastic, and the valuation is still not that huge. So maybe Texmaco can be looked at current levels.
Right. Sudip, the next question is something that is closer to your heart, the NBFC space. We've seen a pause in interest rates from the Reserve Bank of India in April, and it's probably seeded one of the best rallies, at least in my career, also perhaps in yours. The NBFC space is abuzz with, newer, nimble players who are hunting for customers digitally. This is a new landscape for both of us. How do you see the NBFC space over the next 3-4 years? Are there any mid caps you feel which might be multi baggers from now on? Of course, Geo Financials has also entered the segment, and that perhaps alters the ground reality of how NBFCs will operate over the next decade or so. Your thoughts, please.
I think you're right. Geo Financial will be a formidable player with the kind of background they come from and the kind of the book they already have and the plan to build. I think they will be a player definitely. Much. But your question specifically on mid cap NBFCs and some of these not the Bajaj twins or not the Cholas and Sundarams. If I have to look at the space after leaving out the big boys, I think I will probably go back to the gold finance companies. I think that's a solid, strong business which is growing, and competition from banks have eaten some of the market share, but they are clawing back. And I think it's an interesting space because the growth is huge. So in Muthoot and Manappuram, after the huge corrections we had seen in these stocks, do definitely look attractive for a 1 year plus time horizon. One can also look at some of these beaten down NBFCs which have started getting their act together, like Indostar Capital, Ugro Finance. I think some of these are not very common names, but they have got their act together now after a lot of experimentation and mistakes. So an Indostar Capital can be looked at, a Ugro Capital can be looked at.
Interesting names you come up with, Indostar Capital. Sudeep, obviously, a bull market construct leads to some parts of the market being overstretched and overvalued. Trees growing up on the horizon and blue sky valuations being the norm. I'm sure you deal with a lot of equity strategists who come to you and talk about, the moon being conquered when it comes to companies, reporting growth numbers which for the shorter or the medium term are beyond the scope of Excel sheets. Which parts of the market do you think are overheated now?
Well, we did see that in case of specialty chemicals and chemicals recently. I mean, we were just extrapolating on Excel sheet and projecting numbers and valuations. That all came crashing down. End of the day, other than few companies which were doing niche and specialized work, let's say Navin Fluorine or some of the companies like that, I think rest of it were in commodities and the valuations were just Excel sheet extrapolations. And the moment the commodity came under pressure, Chinese competition intensified, raw material prices went up, the entire model came crumbling down. So one needs to be extremely wary about these Excel sheet projections. You're absolutely right. I have been warning investors about one defense sector right now, though it's still the very popular sector, and I continue to maintain that it's a fantastic bunch of companies we have there. They will have a huge growth, but the valuation looks absolutely
Yes.
out of whack at this stage. So I'll be a little wary about buying defense stocks now. I was a big proponent of buying defense stocks, but now I'm advising people to stay away at this stage. When the valuations settle down, maybe it'll be just a time correction, but there needs to be a correction, which should happen now. So one needs to be, careful about that. Some of the internet and new age companies are beaten down heavily, but now again have started going down, going up with a lot of expectations. Some of them have turned small profit. Some of them are on path to profit, but somehow again they have started moving up pretty fast. I'll be again very, very cautious in this space. They are far away from being a profitable business, and to get excited at this stage because just small EBITDA or adjusted EBITDA positive or some small PBT has come, probably stretching things a bit too far.
Right. So, Sudip, I now we are towards the fag end of the interview, and I want you to collect your thoughts. One stock where you would probably put a higher allocation than 10% in an overall portfolio over the next 5 years. Since you understand balance sheets and financial statements intuitively and are have sort of seen maybe six bull or bear markets, where do you find hidden alpha which over the next 5 years would turn into a beautiful multi-bagger?
Well, definitely, I will go and put my money in Reliance. I think market is not valuing Reliance. Inside Reliance, there are 5, 6 large conglomerates sitting now. And the value capture will happen. It's a matter of time. Reliance Geo, Reliance Retail, Reliance Green Energy, all this will become large corporates in their own way. And if you compare a Reliance Retail with a DMart, which we all know the valuation, we all know how it went up, and Reliance Retail is much, much bigger, and the performance has significantly improved in the recent quarters if one is tracking that. Look at Reliance Jio. It's doing probably much better than Bharti Airtel on pretty much all the parameters. And the launch of new telephone, smartphone, which will capture the 2G market, I think they have a huge runway there as well. As far as green energy, I think it's a fantastic area, fantastic thing, and a lot of work is being done, and I'm sure it will also transform into a huge conglomerate. Now the value unlocking will happen, and today's Reliance shareholder will be the big beneficiary. Now, somehow the market is not capturing all that, but the patient investor having 3 to 5 years time horizon, I think Reliance should give him, double the valuation what he's entering now.
Wonderful. So, two stocks that came out of this very wonderful discussion with Sudip. Of course, India's largest banking franchise, State Bank of India, and the most valued company, Reliance Industries. Thank you, Sudip. I do hope you'll be a regular from now on, at least once a month, on how to navigate markets from here on. Thank you for joining us and sparing your valuable time, sharing your thoughts on the broad spectrum of what is a fantastic rally unfolding on Indian markets.
Would love to do that, Chair. Thank you.
So that's it, ladies and gentlemen. Our guest today was Sudip Bandyopadhyay. In terms of building a long-term portfolio, he suggests that you look at two stocks which is the State Bank of India, and of course, market leader and India's most valuable firm by market capitalization, Reliance Industries. Do take another view on how to navigate markets and especially these two stocks from another financial advisor. But that's all for now. Thank you for your time, and do remain glued to Business Today Television for these kind of wonderful, thought-provoking interviews that help you build wealth over the long term. Have a good evening.
साथियों, हमारा जोर भारतीय रेलवे को आधुनिक बनाने